Hang Seng is up on your screen, so that one is around 70 points in the green as well.
We are looking at all such opportunities where the startups have got a viable business plan and where they have got a plan which can generate revenue.
Right now we are in a bit of a parabola. If you see a parabola, if you're in it, you really make a lot of money. But if you miss out and then you enter, then the risk is how do you enter? I think the only way is a trailing stop.
They've cut CNG prices by about 6 rupees to 80 rupees a kilo.
The first rates are in. The Nifty is up about 31 points. The Bank Nifty is up about 83.
The results have been pleasant, I would say, while we went into the result season with some bit of caution.
We are looking towards increasing our non-par business in future.
Ofloxacin is one of the important antibiotic product for us.
It's a bunch of positive news at 7.17. The bond yield is as low as it was on August 4th. And if it pierces this level, it goes to actually some April lows.
Now we're up 100 points on the Nifty, while the Sensex has gained 364 points.
Well, it's been almost a daily sort of event for the market, right? Every day the market's been going up and up. In the month of August, we've hardly had a negative day, and it looks like the market wants to conquer 18,000. Maybe as early as tomorrow. I mean, the bulls are in complete control. Tomorrow you have expiry. So all you need is a gap up. I mean, if we close here, a gap up takes Nifty to 18,000. And all of this on back of a very strong market breadth or reasonably strong market breadth. Of course, the big catalyst has been the FI buying. Not that the market didn't rally before that, but the pace of the rally really picked up once FIs turned buyers, and after that there's been no looking back. And today, if you look at the components of the market, it's IT which is clearly led with support from consumer and Reliance, while banks have been relative underperformer. But Prashant, Nigel, good afternoon. It's been such a stunning move.
I mean, what is remarkable, afternoon guys, is the fact that, the index is at 18,000, an index which is at 18,000 with tens of thousands of crores of turnover. I mean, it doesn't move 20 points, right? I mean, 20. You just go back and look at 10-minute candles of the Nifty, starting from where we began this morning. It's been gradually higher. I mean, a couple of candles in, nothing happens, and the next, the candle after that, the previous high is taken out. I mean, that is how it has proceeded. Very little volatility, we've seen days like this before, but every time you see it at these levels, I mean, it is something to kind of point out again and again. So 110 points, this is looking very, very strong, very steady, more than strong. I mean, without any shakeout whatsoever, at least not yet. 17,934 is where we are at. We are above the 78% retracement of the entire fall. We are above all falling trend lines. The last one, of course, from the all-time high of 18,604. There's nothing really between where we are and, of course, 18,604 in terms of levels to watch, etc. So there are those who believe that maybe, it's gotten very, very overheated on measures like the RSI, etc. We are at one extreme now, and maybe that is true, and maybe that pullback, etc. will come. But there is no doubt that the instinct, the impulse has been to buy the dip. However, even if it is small, big, the first impulse has been to try and buy the dip. Nigel, hi.
Well, good afternoon, gentlemen. What a lovely screen that is. It's a trending day. You bought at any point of time, you'll be making some money. But the FI, the hot money, that's clearly what's chasing this market. And irrespective of, what's the call on the index, we're just going one way. It's up because the kind of inflows that we have seen. And in the last fortnight or so, we have seen $2 billion of inflows from the FIs. Keep in mind that, in the previous 11 months or so, they sold close to around what? Close to around $7-8 billion odd. So, we've seen big outflows out there, and just a very, very small portion of that has come back. And yet, in fact, the markets are rejoicing. So let's see whether or not, we are set to make fresh all-time highs as well. But how do you position yourself in the final hour of trade? Well, I think we have Mitesh who's joining in. Hi, Mitesh. Good afternoon. Before we talk about the Nifty, what's going on with the Nifty Bank? Yesterday in the final hour as well, that was a relative underperformer. Today, yet again, it's showing some bit of sign of exhaustion. The IT Pack's doing well, but the Nifty Bank at around 39,400. What are the levels you're tracking?
So, Nigel, two things. One, I think along with the Nifty and the other indices, the Bank Nifty also has been making new highs. And while last, 2 days, which is basically yesterday and today, we've not seen that kind of ferocious performance. I think we got a weekly gap up on Tuesday, which means that the last week's high was 39,089 and this week's low was 39,119. So there's a 30-point gap. And despite the fact that it's kind of participating less on the upside, it's not going down and breaking below that gap level. So I think this 39,088, 89 level, just 10 points below that becomes a trailing stop loss. As long as that is not being reached, good chance that the Bank Nifty is aiming towards a high of 40,400 on a positional basis and maybe levels beyond that. So as of now, I think, yes, you will see some sectoral churn happening today. I think Auto, Reliance, etc. have kind of come into play with a strong move on the upside. Yesterday, we saw Eicher and Escorts lead it. Today, I think, TVS, etc. are doing very well. So broadly, it just looks like a churn, but I'm not really worried. Again, on the Nifty also, we've not been able to trade the index for the last 4 odd sessions because we've been waiting for a good entry point. Extremely overbought, but as I think, you were highlighting that the markets keep on going up and we're now getting very closer to this earlier height of 18,025, which on a weekly basis is a strong pivot. I think once that has been crossed, then we are looking at even a possibility of 18,250 happening. So no threat to the trend, but on the index, I think we don't have a trade as of now, don't have a good entry point. Again, there's a weekly gap on the Nifty, which is 17,720 to about 17,760 zones. So you'll have to wait for a 100, 120 point kind of correction to buy afresh with a 17,720 as your stop loss. Till then, I think trade on the long side, stock-wise, take Mahindra as a buy. That's breaking out today. That's a buy with a stop at about 1,084 for targets of 1,150. And PSU banks are doing well, and I've picked up a smaller one, PNB. That's a buy as well. The 200-day average is at about 35. I think that's the target, and 33.5 can be the stop loss.
Okay, Mitesh, thanks for those calls. We'll come back to you for BTST calls. Prakash Diwan is joining us on the show now. Prakash, hi, good afternoon. I wanted your thoughts first on the Bajaj twins, both Bajaj Finance and Bajaj Finserv. It's been a stunning move and just no stopping it. I think in the last 1.5 months, these two stocks would have moved 40 to 50%. What's your view here?
Good afternoon, Anuj. Yes, it's been stellar, absolutely stellar. And when Bajaj Finance, just before the numbers came through, we've seen how it was kind of languishing in a band, very narrow band. It didn't see much of impulse. But the numbers probably gave the market the conviction that the juggernaut is still on. The story continues to unfold with newer areas which they could kind of look at for client acquisition and value addition. So I think it's the specific business engine that they've created that's working for them, at least on the Bajaj Finance side. And Finserv is something which, very clearly when you look at the insurance businesses, the other, allied businesses that they have in their portfolio, everywhere you see technology making such a big headway in terms of market share increases. So these are stocks. And remember, the thing that's changed in the last 16 days, Anuj, is FI money coming back. And there's no way FI money can stay away from buying into these two twins. So there is definitely a lot of demand for the paper, which is resulted into this quick move that you referred to. But to me, they are expensive. So these are not stocks that you buy, in momentum. You buy them on a dull day, on a day where there's blood on the street, and for no reason or no fault of theirs, the prices would probably give you a decent entry. So they are expensive. They've always been expensive. They might continue to be expensive, but at this point, you just have to, if you hold them, you enjoy the ride, but it's not the time to buy additionally more.
Prakash, hi. So basically then to flip that on that point on its head, buy out of favor businesses, right? That's the way to make money. That's the way to invest. So where or what are those opportunities now then?
So, Prashant, the way things are looking, look at what pharma is trying to tell you. Pharma is a vast area. We have so many listed names, different business models, different phases of evolution that most of these companies are. You really can't compare and bunch them together except for, certain large categorizations. But by and large, if you see, pharma is an area that seems to be probably seeing that kind of a money going into it, and there are certain indicators that things will start looking up. In spite of poor results, we saw how PVs reacted, responded the next day. We've seen Biocon has been out of favor, but it's kind of smartening up because of certain changes that are coming in. And the old traditionally strong names like Lupin and Sun Pharma, I think Sun Pharma has already made so much of headway. And we've we've had this whole thing of the US FDA inspection starting. So OAI is coming through and eventually getting resolved. Which means that, for the next few years or couple of years, at least on certain launches, you don't have any kind of an overhang. And that's something which works very much in favor of stocks. So anecdotally, pharma has done well when the intensity of US FDA inspection has been high. Post that, pharma selectively has done very well. My sense is you'll probably see that happen. So that's a pocket that's under-owned. And of course, utilities. I mean, the way Coal India has woken all of us up to the possibilities of what's happening. So look at NMDC. I mean, it went all the way to closer to 100, and things looked bad. There were no exports that were allowed. I know prices kept on crashing, but certainly things have started looking up very positively. And NMDC is probably something which could offer great value. So, dividend yield, value, all of this is kind of what you need to start fishing for. Otherwise, you're going to get caught to the momentum. The FOMO is very strong on the retail side, Prashant. I can tell you that much. So, and that's what kind of makes me a bit cautious. That when people want to start doing this closer to the all-time highs, it's difficult to kind of make money if you also buy into at the same levels, unless there's a secular bull run that is very clearly visible. To which, to me, that's not yet. So I would wait for some sort of a softness to really build in. Yeah.
Well, Prakash, you said that the FOMO factor is playing out. Earlier, it was the FOBI factor, fear of being invested. Now everyone's afraid of missing out on this. But what about Midcap IT? That's suddenly come back, and some of those stocks have given you a very, very good bounce. What's your view out there? I had a brokerage today that said that Happiest Minds, its valuation very, very expensive, but they are justifying the case and they believe that it deserves such a multiple. Your view on Midcap IT in particular?
Yeah, hi, Nigel. So you're right. Some of these names, and Happiest Minds has been one of my favorites also. But when it lost ground to that 800 zones and then kind of, padded up this whole recovery of 25% plus, now closer to 30%, the whole thesis is very clear. People didn't want to sell off beyond a point. I mean, they believe in the long-term story. So it's something like what happens to DMart. I mean, you don't really look at EPS and a PE multiple to justify. You don't look at EV, EBITDA, because all those metrics would actually make you get a bit quizzical about why you're buying it. But you buy that for the continuity of good business, irrespective of a couple of bad quarters that could happen, or maybe a year in between. But for the long term, the trend on digitization, on the kind of deployment that they have, the kind of client wins that they've been talking about. So all of that makes you believe that this is a business which will never go out of fashion. And IT is something where I think we still have a very good footprint and strength, and that could only grow deeper. And especially when continental Europe is suffering, and especially some of the allied countries in Eastern Europe, which were competing with us in some of the contracts. I remember Poland, Romania being very active on some of those IT services. That's also kind of getting, to be a big advantage for us. So I think IT will make a comeback, but the mid-cap IT companies which have less dependence on people is probably what's doing well right now at this point in time, where their interfaces are mature enough and all. But you look at an offbeat company like Tata Communications. I mean, I know it's not an IT company, it's not a communication company, it's straddled somewhere in between, but those are opportunities where recovery will happen faster. People didn't like certain things from the last investor day, but it's recovered beautifully from there, and it has a momentum of its own. But you could stick to the larger ones. Tech Mahindra continues to be pleasantly valued now. It's not over the top. It's not undervalued as well, but I think given the visibility of 5G business that would come its way globally as well, not just India, TechM is something which could deliver very good returns from here.
Okay. By the way, just pull out the intraday chart of Shemaru. It will be interesting to see. Shemaru, of course, for a lot of people who won't know, was used to be one of the pioneers in the Indian movie industry. I think they still have a lot of rights, but that one's all of a sudden taken off 13% higher on that stock. The other one which stands out right now is Hikal. That's making a big move and massive volumes on Hikal actually. Just look at that intraday chart. Almost 50 lakh shares traded on Hikal. Prakash, it's a stock which has been very volatile, right? I mean, it's really all over the place. It's done well from a one-year point of view, but in between you've seen a couple of accidents as well. What's your approach for this stock now?
Anuj, yeah, it's confounding. The kind of parentage pedigree that it has, the skill set and all of that. I think it's a lot to do with the space that it is in. It has been delivered. It's been appreciated. The P multiples have come back because it's in the right spot at the right time. But fundamentally, the company is flattered to deceive so many times in the past. So now, is this going to be different? Hopefully it is, because a lot of those things from the past seem to have got obliterated in terms. They've overcome those challenges. As you said, these fires kept on happening, and there were disasters with the regulators in terms of safety aspects. So it's had its fair share of ups and downs. But I think they're in the right spot in terms of the chemistry. So if the Kalyanis and the Hiremats of the company decide to kind of put force behind actually progressing on the business, there's no reason why you would not see it start doing well. But that space has lots more to offer and promise, Anuj. So this is not a stock that I would recommend on a fresh buy. But for people who have been holding on for quite some time patiently, it's probably good tidings that seem to be coming in, and you could probably hold on. But no more fresh buying is recommended at this point in time, given the choices that I mentioned.
Okay, all right. Prakash, I wanted your view on BEML as well. We spoke to Baba Kalyani last week, and he was talking about business. And when we quizzed him about, are you interested in the asset? He said possibly so, but though there's been no progress out there. Now, tomorrow they have that demerger meet, the board meeting. What would you do with the stock at around that 1800 odd? Because post demerger, then in case there is some divestment, well, it has a bit of a clearer path. Your take?
So, Nigel, this is interesting. It's just that at 1800, it's got a tad expensive. It was available, in reasonable bands of 1200 to 1500 for such a long time. But I still feel the kind of assets that they have and the kind of models, the product mix that they have, it's irreplaceable. And if you see so much of activity in terms of infrastructure, be it road, be it bridges, be it construction, housing, this is one segment of equipment that we are always under this thing, what you call equipped with. And most of these companies have started following a model of keeping a library of these assets in their core. Dilip Bilkon was the one that started off, and then some of them really kind of understood how beneficial that could be to turn around your assignments and projects quickly. So I think that's a huge market that's waiting. The government is, of course, one of the biggest spenders as well. I would definitely believe that there could be some positive outcome on the board meeting in terms of unlocking that value. But there is a lot of value. So even if you had to buy, hoping this happens over the next 18, 24 months and gets you that value, there could be a decent upside of 30-35% from here for sure.
Okay. All right. Prakash, stay with us for the time being. I think the stock has moved higher. It's up close to around 2.5% as we speak. The board meet is scheduled tomorrow. Slip into a short break. On the other side, we'll be joined by Gautam Dugard of Motilal Oswal Financial Services. He'll be joining and talk about markets, his portfolio bets, as well as the earnings season that just went by. Stay with us. Welcome back. Well, BEML, the stock has moved to the high point of the day as we speak. Just keep an eye out on that one. It's spiking up. Pull up the intraday chart out there. Prakash just gave us his view on the stock. It's up 4.5% as we speak. Well, Prakash, I wanted to review on a couple of other names then. Hindalco. The reason the stock is up today is because there's talk about some supply cuts in various parts of the globe. And that's what could push up aluminium prices. Remember, we spoke to the management of Hindalco, and they suggested that for the domestic business, aluminium business is going to be soft in the second quarter. So that's already a given. But at around 440 rupees, if aluminium prices are expected to move up because of the supply shocks, what would you do with the stock? Novelis's business is looking rock solid, at least till now.
Yeah, so it's a mixed bag of sorts. aluminium production itself, the smelters coming to a shutdown because of energy costs or whatever issues that they've been facing, is definitely an advantage for other players to fill in the gap. But in the end of the day, there will be an impact on the demand given the high prices, because it's also a converter in a lot of places, and especially Novelis, Arylis, both of them have a fair share of that element of business as well, Nigel. So that's something which will probably set off the gains that they could make from a little bit of a price escalation. And LME prices and finally the realization prices, there's always that gap which you may not get to enjoy for too long, and then that's where the smelters capacities in globally, if you see, even when you had shutdowns in Latin America and all, it didn't impact so much. But yes, it will have that impact. And even otherwise, we discussed most of the numbers. Everything looked so fabulous. There's growth, and the confidence of the management itself tells you there's enough to go, more headroom for them growing secularly, irrespective of these disruptions that you saw getting reported from Europe in the last couple of days.
Okay, well, Force Motors, just pull out that stock. Today's been just one of those days. A lot of sort of forgotten names are making a huge comeback. Force Motors up 12% right now. Now, I mean, if you look at the stock this month, now it's up 19%, and still about some 30% off its 52-week highs, while the rest of the auto pack is almost there. Any views here, Prakash? Force Motors?
Not really. I mean, I think it's just that, people finally have found, they've gone deep down into that auto, list and figured out what's within auto but not moved. So you'll probably see this happen in Swaraj engines at some point and Force Motors. So all of that is there. But of course, the segment that they cater to, the upmarket, segment, the D and the E segments, especially the Mercedes work out here, it's in good fettle. So there's nothing wrong with that. It's just that you certainly don't have anything which would start changing the fortunes of the company right now, unless there's something that I don't know in terms of a development. But at this point, you stick with the mainstream OEMs or possibly some of the auto ancillaries that are far more promising.
Prakash, I'll tell you, in Bombay, and of course this is a sample size of one, which is me, school buses, right? I mean, I think they make buses, etc., right? The school buses are in short supply, or at least drivers are. And that is a situation because of COVID or whatever. But I know this to be a fact in not just school that my kids go to, but a couple other schools as well. So I mean, but that's maybe that's just Bombay and a few schools. But go on, sorry.
Prashant, it's a very valid point. See, in the last 2 years, some of these buses were redeployed in other things, in corporate commute and stuff like that. And now that tourism has come back, a lot of them will not come back to the school segment, right? So you will have to invest into newer this thing. And of course, the drivers have probably taken to newer professions as well. So all that disruption might be helping, and there could be some lumpiness in the demand. But other than that, I don't see any spectacular reason why things would have changed.
Yeah. Absolutely. Perhaps just people looking for ideas as prices across the board have run up quite a bit. Prakash, thank you very much. Great conversation as always, and thank you very much for coming on as always. Gautam Dugar is now joining us, Head of Research, Institutional Equities at Motilal Oswal Financial Services is with us. Gautam, great to have you back on the program. Thank you very much for your time. So just a first take on corporate earnings. I mean, the last time we spoke with you was exactly what? I think a week and a half back, basically, but numbers were still coming in. But now you have a full bird's eye snapshot view. How has the earnings season been, and what does it mean, if anything, for full year earnings upgrades or downgrades?
Hi, Prashant. Good afternoon. Thanks for having me. So the corporate earnings, if you look at, you have to look at it through two different lenses this time. If you look at aggregates, they are slightly underwhelming because of the big disappointment in some of the cyclicals and heavyweights like Reliance, Tata Motors, and OMCs. So if you look at aggregates without excluding anything, Nifty earnings are up 23%. We were expecting a 30% growth. And our coverage universe earnings were up 12% versus expectation of a 20% growth. But if I look at Nifty by taking out two loss-making companies, which is BPCL and Tata Motors, the growth is around 31%, which is in line with expectation of about 34%. And if you look at, again, the same aggregates excluding commodities like oil and gas and metals, earnings are up somewhere about 35%. So while the aggregates may give you a sense that this has been a slightly disappointing quarter, but if you look at the internals and the spread of the earnings, it's been fairly okay, in the sense that 70% of our coverage universe has either met or have beaten expectations. 14 out of the 20 sectors that we track, again, have beaten expectations or have met expectations. So the spread and quality of earnings is far better this time. Upgrade to downgrade ratio is even Stevens. We have seen about 80 companies with earnings upgrade of more than 3% for FY23, and similar number of companies with a downgrade of more than 3%. And as far as forward estimate revision is concerned, we have taken a cut of about 3% for FY23. So entire 3% cut has happened because of the earnings cut in ONGC, Reliance and BPCL. Rest of the 47 pack put together are roughly stable. So our new EPS is at about 845 rupees for FY23. We were at 865 when the quarter began, when the preview happened. And for FY23-24, we are still at about 1,000 rupees. Okay. The only thing slightly concerning right now is large part of the growth, or in fact, the entire growth this quarter has been driven by financials. X of financials, our broader coverage universe, there is no growth. And for Nifty, the growth is about 18%, which is slightly underwhelming versus the expectation of about 27-28%.
Okay, all right. Hi, Gautam. Good to hear your thoughts. Gautam, what's the downside risk to this 845 rupees? You've cut it by 20 rupees. The fear is from here, the going is going to get tough. Q2 should be a little bit softish, but the hope is that recovery from the second half of the year. What's the downside risk to this Nifty EPS number that you have of 845 and 1,000?
So Nigel, when I look at the next 3 quarters, because we split the earnings into 4 quarters right at the beginning of the year, our full year growth expectation is 15%. First quarter itself was 23%. So rest of the 3 quarters have a slightly modest expectations of about 12-13% growth. Because now the base will also catch up. Do remember that FY22 full year corporate earnings specifically for Nifty were up about 35% in terms of EPS and 40% growth in terms of absolute profits in FY22. So on that high base, we are talking about a 15% growth in FY23. Rest 3 quarters, our average is about 12-13%. As far as downside risk is concerned, it can emanate from anything here. I mean, we didn't know that crude will go down by $30-40 and it will have an impact on ONGC numbers and Reliance numbers. In fact, counterintuitively, higher inflation and higher commodity prices have actually worked in favor of Nifty. If you look at the earnings projections over the last 12 months, wherever you've seen commodity price inflating, you've seen upgrades in metals and oil and gas, which is 30% of the profit pool. Now that commodity prices are receding, some of the other segments of the market like auto, consumer, cement may see a slight bit of a breather on margins, but the profit pool contribution of metals and oil and gas is still quite substantial, and therefore they may take a knockdown. So a lot depends on where oil settles on a full year basis. But yes, there does exist some sort of a downside risk. But at the same time, you've now seen in the last 30-35 days, bond yields have cooled off. So this quarter, financials took a hit on their operating profits because of treasury losses. So some of them will get returned back in the second and third quarter, depending on what is the size of the book and how it is positioned. So there is a cushion available. There are multiple moving parts, as always, when you look at a broader index. But I think we should settle somewhere about 820, 830 for FY23. So maybe 2-3% more downside risk to the earnings.
Okay. Gautam, the big mover post the earnings has been Bajaj Finance. Even Bajaj Finserv actually. What's your view on these names? Because these are large stocks and the way they moved, I know there's been some FI buying which is back, but has it surprised you, the move?
I think they deserve that movement, Anuj. If you look at the quality of earnings, the kind of AUM growth they're guiding for, asset quality, in fact, all the concerns that we had a year and a half back when the pandemic began, that growth will take a knockdown, asset quality will deteriorate. None of that has panned out. And not just for Bajaj Finance, Anuj, it's been the case for all the large cap financials, whether it is a bank or an NBFC. The last 2.5 years have been a dream run for banks' profitability. You've seen almost a 4x jump in Nifty Bank's profit from FY18 to FY22. And on that FY22 number of 1.5 trillion, we are talking about 1.9 trillion for FY23 BFSI profits. So I think the kind of movement that you are seeing in some of these names, they actually deserve that. Secondly, the concern on growth has receded across the board. So a few months back, a lot of the growth stocks or the high quality stocks were taking a knockdown because suddenly there was a shift towards value. But with yields coming off, inflation picking out, and growth outlook getting better, a lot of these stocks, spanning across spectrum, whether you look at consumer discretionary, names like Pidilite, Asian Paint, or QSR, where things like Jubilant, Sapphire, a lot of those things, Page, they all seem to be doing well the moment market again starts gravitating a little bit more towards growth over the value positioning that we had seen come into reckoning in the last 1.5 year.
Gautam, this entire FI buying which has come back, I mean, in the last month and a half, there have been buys of Indian equities worth about $3.5 billion or so. And the index is already just about 3.5% from all-time highs. Now, the fact is, bulk of the selling, I'm assuming, happened in financials and IT, right? Which are still far away from being near the respective highs. So how is this largely going to play out in your assessment? I mean, when you speak with foreign clients, etc., where are they looking to buy stocks? Where is the interest, and what are they making of the market now?
You're right, Prashant. For example, if you look at the FI holdings in India, we did this report a month back when the June shareholding data was released. So they have about $560 billion. Of course, you can add 5-6% more given the market rally which has happened. So out of $560 billion of their overall FI holding in India, around 37-38% is financials and about 16% is IT. So the two sectors together comprise 53-54% of their total holdings in India. And then you have consumer, reliance, and auto, which account for another 20-22%. So between these five sectors, they have about 75% of their portfolio, very concentrated positioning. So it's but natural that when they sell, which they did from October to June of about $35 billion, you saw a disproportionate impact on these two sectors. And now with the semblance of buying coming back in the last 1.5 months, you are seeing some of those spaces bouncing back. What can happen in future, very difficult to tell which way they will be moving, whether they will be buying or selling. But can be rest assured that the movement will get disproportionately reflected in these two sectors. If they're buying more, obviously BFSI and IT will benefit. And if they're selling more, these two sectors will bear the brunt of that selling.
Okay, by the way, just look at the market. All of a sudden, there's a sharp uptick in the bank Nifty. And just look at HDFC Bank's intraday chart. In fact, both HDFC Bank and HDFC, through the day, these were the only stocks which were sulking while the market was doing so well. And now HDFC Bank has moved to high point of the day, and HDFC as well has moved to high point of the day. So big moves happening in both these names. The Nifty is at 17,957. I don't think there's enough time for it to hit 18,000 today. But sometimes these events, these things get taken out with a gap. Because otherwise there's always this program trading or algo trading which makes people book profit at around 18K. So it will be interesting to see if we have just semblance of decent global cues. Tomorrow morning perhaps we could be looking at a date once again with 18,000. Remember, October 2021 is when the Nifty had hit 18,600. From that point we had that correction in the market, and now we are almost back to 18,000. Gautam, any view on the HDFC twins? Because they have underperformed for almost 2 or 3 years now. Do you think that will continue, or will they sort of make good for the underperformance like they normally do?
I think they will make good for the underperformance, Anuj. There is tremendous value sitting in both of them. In fact, there's no point comparing both now because the ratio is well established. If you look at HDFC Bank itself, the profit growth has been excellent. Has been no dent on the asset quality. The fundamentals has been quite strong. If you look at the performance on the market cap, the last 3 years CAGR, Nifty is at about 17% and HDFC Bank has 10%. So there is a lot of catch-up that HDFC Bank has to do in terms of relative gap. The fact however remains that the growth has been quite strong for them. In between there have been a couple of quarters where the operating profit did moderate, but some of these things keep happening. You've seen even for the other banks in 1Q FY23, the treasury MTM impacted the operating performance. And now, the positioning has shifted completely. For example, if you look at the domestic mutual fund portfolios 3 years back, 17 out of top 20 mutual funds had HDFC Bank as the #1 stock in their portfolios. today, if you see the same portfolios, about 18 out of top 20 mutual funds in India have ICICI Bank as the number one positioning. So clearly, the sentiment has taken a bit of a knock given the recent underperformance, but I think the inherent and underlying value in that business remains intact.
Okay, all right, Gautam, thanks so much for stopping by and filling us in with your take on the earnings of the past quarter, as well as the way ahead as well. Well, before we slip into a short break, just pull up a couple of stocks. Oberoi Realty, I think we should pull up the intraday chart out there. The stock was down close to 2%. When we started off the show, I think it's recovered a little bit from the day's low. A sharp uptick is what we're seeing from the low point of the day. And a couple of other names. You have AB Fashion Retail as well, that's seen a bit of recovery. Havells as well has seen a bit of a spike up in the last few minutes. Keep an eye out on the broader markets. The Nifty is doing well, but the broader markets as well. A lot of stocks moving with good momentum. Slip into a short break, come back, and as always, we'll tell you what to buy today to sell tomorrow. Our technical experts will be back with us.
Welcome back. Like we've been telling you, the market's been, inching up. It's really been on some kind of steroids all through this month, and the move has been really, really strong. And we are now at the cusp of 18,000. Mitesh Thakkar is back with us for some BTST calls. Mitesh, what a stunning move once again. And through the day, I mean, if you would have bought, you would have made money. It's been that kind of a market. Just forgiving market, right? You can make mistakes and the market just sort of lets you go unpunished and even rewards that. But what do you do now in this market, and what would be your BTST calls?
I think that's the case, for last about 10 odd sessions, starting from 17,100, the low which we got on 4th of August. Since then, there's been hardly, 100-point kind of a proper pullback or a correction. So it's a very strong market, and it's definitely surprising. But then, yeah, we keep trading on the long side. Wipro and Bharti are the calls which I have right now. Bharti, I think, is moved towards the high of the day. That's a BTST with a stop at about 716 for a target of 730. And Wipro is the other tech stock. We had Tech Mahindra as the call earlier. Wipro has also broken out. That's a BTST with a stop at 440 or just below it for a target of 450 for tomorrow.
Okay, all right, Mitesh, thanks a lot for that. Well, let's get in Deepan Mehta, Director Elixir Equities, who joins us. Hi, Deepan. Deepan, before we talk about other stocks, I wanted to ask you about the real estate space. Oberoi Realty, the stock has seen a fair bit of a correction. I think the high was around 1,100 or thereabouts. The 52-week high at around 1,050 in November. From there, it saw a bit of a correction. Now, the stock in the last few minutes as well has seen a bit of a spike up, but at around 950, 960 odd. What's your view on the space, first of all? That's the real estate space, and in particular on Oberoi Realty.
Yeah, good afternoon, Nigel, and thanks for having me on your show. We're very positive on the real estate space, and we are seeing the beginning of a multi-year upswing within the sector, and that will give confidence to a lot of builders to increase the kind of construction activity they have underway. Prices have stabilized, volumes are picking up, there's consolidation taking place within the segment, and most real estate companies now are focusing on cash flows rather than just adding to the land bank. So very positive on the sector, and Oberoi Realty certainly can give very good returns over the next few months and quarters. It's been one of the conservative real estate players, and they focused on a specific geography, that being Bombay and the areas around it. And never has it been in any kind of a trouble when it comes to leverage or even corporate governance issues per se. And they have reasonable rental income also coming in from the mall and the hospitality assets which they have. Valuations have always been premium for Oberoi Realty, but very well justified. So very positive on both the stock as well as the sector.
Okay. Deepan, afternoon, hi. Any hospital names you like? We had that big deal in Max, which happened. Fortis is something which, of course, is not the cheapest, but at least amongst the large national chains, hospital chains, maybe it is the cheapest amongst those. And then there are others. I mean, there is Kim's, there is Kovai Medical down south. Anything you like there?
Good afternoon, Prashant. And you mentioned about Kim's, Krishna Medical. I think that's an interesting company over there. Extremely well-managed company, very high efficiency ratios, and decent amount of brownfield expansion also gradually going on stream. And they've been having amongst the industry-leading operating profit margins as well, and dominant position within the area or the geography they are present in.
So I'm very positive on that stock per se. It trades at a discount to some of the larger hospital chains as well. And going forward, I think as and when we see greater and greater occupancy levels or utilization levels going up, you will see operating leverage also come into play over there. So very positive on that particular stock. But the sector as a whole also is picking up very well. Of course, Apollo Hospital was a bit of a disappointment. But then I think we need to give them some more time for the new digital initiatives to start contributing meaningfully. But that apart, I think broadly, I think all of the companies are done pretty well. And if you are present or owe it, many of the companies, they are in good position. But specifically, I think at this point of time, we feel that Krishna Institute of Medical Sciences, KIMS, is perhaps best placed to provide some amount of outperformance within the sector as well.
Okay, Deepan, afternoon, the couple of stocks which are playing a bit of a catch-up are these PSU banks right after SBI, Canara, PNB and Bank of Baroda, the three big ones. Any views here?
Good afternoon, Anuj. You know, I know that investing in PSU banks has been propagated by many, I would say, investors, FIs as well, and domestic investors. But I'm not a great fan of PSU banks. I think these are not great banks. These are not outstanding businesses also. And they will keep on losing ground to the private sector banks. I know they are cheap, and that may be one of the reasons to buy. But I've realized one thing, that just buying a stock because it is cheap never gives the best results or the returns. So while you have the top 4 or 5 private sector banks gaining market share, growing at 20% thereabout on a top line, bottom line basis, then I don't think there's a need to dabble into some of the PSU, the second run PSU stocks per se. If you still want to buy a cheap bank with a PSU tag, then I think SBI fits the bill perfectly well, and you can look at that bank.
Okay, all right. Deepan, I want to ask you about a couple of these insurance stocks. And everyone's talking about the good recovery that the market has seen. HDFC Life is a far cry away from its 52-week high. In fact, if my director can pull up a year-to-date chart of HDFC Life and the Nifty, well, the Nifty is higher in comparison to what it was at the start of this year, while HDFC Life is still down close to around 10%. Your view on the stock, Deepan, quality franchise, good management pedigree, valuation-wise as well, not very, very expensive in comparison to what it was trading at around 590 rupees odd. How do you view the stock?
Very positive, Nigel. I think just give it some more time, and if the Nifty crosses past its all lifetime highs, then HDFC Life will not be much far behind. It has best-in-class earnings growth, and particularly impressed with the kind of innovative products they keep launching. Strong, aggressive leadership as well. And of course, there is the HDFC brand, which enables it to leverage and the retail network also of HDFC Group, but certainly benefits the company. So it's a market leader, and I would say a premium player. And if you want to buy to just one insurance company, then certainly you could look at HDFC Life. But the outlier could be LIC. I think we saw the interview on your channel today, and I think good developments taking place over there. I've been disappointed with the company in the past, especially them not disclosing their EV. But maybe you should give it a bit of a chance and see how that plays out.
No, I got that. In terms of hotel names, Deepan, anything you like now after the moves we've seen? And specifically, do you have a view on Taj GVK? I mean, we discussed Lemon Tree, Indian hotels quite a bit. Taj GVK, any thoughts?
Prashant, I don't really track the stocks, so I don't want to comment on it. But I think you go for the best. I think Indian hotels is pretty impressive at these price points and can still deliver decent returns.
Deepan, stay on. We have a couple of more questions for you. But let's do one thing. Let's get you some more market opinion. Then in the morning, we spoke to DSP Investment Managers Vinit Sambre. Let's hear out his thoughts on markets and some individual sectors.
The results have been pleasant, I would say, while we went into the result season with some bit of caution around the demand momentum. But I think across various categories, we are seeing that the demand seems to be pretty okay, despite the spiraling inflation. So I think that is the one part which I think has come out good. And the more important aspect is that, with most of these commodity inflation sort of tapering off, there is an expectation that as we head into the next few quarters, let's say third and fourth quarter, it will, things should be better off from the profitability front for the companies. Plus, the ensuing festival season should also uplift some bit of the demand momentum. So I think all in all, that has got factored into the markets level today. And the way to sort of think maybe from the levels perspective, I mean, there's no point in sort of predicting these levels, as we generally get caught on the wrong sides most times. But I think more importantly, the fundamentals seems pretty good right now. Most of the large segments, they seem to be sort of on a cyclical upswing. I mentioned about auto. Real estate is doing well. We saw the order book position of a lot of these engineering and capital good companies. I think they are at their all-time highs today, which is also a signal of a lot of activities which are happening and sort of likely to benefit these companies. So I think some of the larger segments, and banking, one of the largest, is actually started showing good credit growth. So all in all, I would say things are being on a cyclical upswing.
Consumption has come back in a massive way. In fact, it's a bit of a deja vu. Consumption and those financing the consumption are leading this run once again, which is what we had when the last bull market started, before IT took over. But your view on how some of these stocks have moved up, the consumption names, both discretionary and non-discretionary?
Between the discretionary and the non-discretionary, I would say that with the opening up of the economy, I think there is a good amount of uptick which we have seen across few categories within the discretionary. Largely auto right now seems to be pretty resilient, and we were sort of anticipating some bit of cyclical uptick there. So that has come out well. But I would assume that when we look at the data points of most categories which are likely to be beneficiary of the opening up of the economy, people going out and spending, I mean, those are happening. The urban centers and the metro centers are doing well. But the one side, which is the rural and the entry level or the mass category, is struggling a bit right now, which to us also is most likely should come back as we see some of the rural outputs coming out better with good monsoons and good reservoir levels. So I think overall the consumption trend, we would like to believe or prefer the discretionary over the non-discretionary as of now.
What do you think the sector of the year could be from here on?
I would say that, within discretionary, you have auto, which, we would sort of continue with our view about the cyclical upturn there. That's one, that's a large category to think about. Then there are smaller, categories which should benefit, let's say, within the retail, I would say footwear, the food retail companies. I mean, these are the ones where we are optimist, and we hold them in the portfolios as well.
Could you just talk to us a little bit about, without naming names, what are you bullish about? Valuations again there, are they too high? Are they still reasonable? I mean, we don't have that many listed now. We got a new one and a bunch of old ones.
So, actually, the industry has gone through, cyclical downturn because of COVID. We had school, colleges, offices all shut. And now, most of these institutions, as they open up, I think the demand momentum should also normalize. So, the category, it's a 80,000 crore market, and the companies here, they organized maybe 5 or 6 of them who are large, leading companies with good distribution, trying to do a good job in terms of the brand improvement, the positioning. I think these are the companies which I believe, and anyways, the footwear, overall usage pattern in India is improving. People wanting to have, footwear for different occasions.
Well, just take a look at some stocks, the way they're moving. Happiest Minds, when we started the show, it was up closer around 7.5–8% odd. It's up closer around 12% now, so that's spiked to the high point of the day. It appears there is some value unlocking exercise by ITDC as well. So that stock, in fact, is up closer around 12% as we speak. There's a BSE notice out there, and also maybe that news flash with regard to some bit of support for the hospitality sector as well. So that could be playing out there. Volume's not very, very high normally, but that one as well has spiked up. Well, Deepan, before we wind down then, today what's having a bit of an off day is some of these cement names. The likes of Shree Cement, they have not participated. You have Ultratech Cement as well, that's a little bit lower. But, going ahead, things are going to look up, hopefully, in the second half of the year. How would you view these stocks, given that valuation-wise, they're trading at a bit of a discount in comparison to what they've traded, I'd say, on an average for the last 5 years or so?
See, Nigel, by and large, cement companies came with a disappointing set of numbers, and we are seeing a great amount of capacity buildup coming up. A major player has entered into the cement industry, and that's certainly going to shake up the existing players. And the cost increases, they continue to, kind of affect the operating profit margins. And while there are so many other sectors like tech, banking, automobiles, I think they're doing pretty well. So investors' choice should be in those higher growth sectors rather than cement at this point of time. I would still prefer to go with the cement consumers, the real estate companies, the construction companies. I think there's good value over there and scope for outperformance. So I would give cement a pass for the time being.
Okay, give cement a bit of a pass for the time being. Well, the market's cooled off a bit. It looked like it was going to end right at the highest point of the day. But just maybe in the last few minutes of trade, there's been just a bit of a profit-taking move which has happened. Nothing wrong with that because, the market's almost giving you daily an opportunity to make money. So, maybe why you want to take the risk of any kind of a gap. But, if you look at individual names, just a couple of names which stand out. Tata Motors is seeing some profit-taking and Tata Steel as well. So, both these names actually seeing a bit of a decline. Deepan, a word on both Tata Motors and Tata Steel?
See, I think we've been very negative on commodities, so wouldn't want to buy into Tata Steel. And Tata Motors quarterly numbers were also disappointing, but certainly there's potential in JLR considering the kind of order book position they have. But, there's an amount of patience that one can keep in the stock. Every time they keep on talking that they have the bookings, but there are supply constraints and the numbers never come through. So maybe I think it's better to give some of the other auto companies like M&M, which came with a very good set of numbers, Eicher Motors or even Maruti. I think maybe this time around, you could see outperformance from these companies over Tata Motors. And by and large, I think Tata Motors' entire EV strategy and the value unlocking over there, that has not less been priced in. So I would expect Tata Motors to be at best a market performer. But some of the other auto companies I just named just now, I think they could give very good returns over the next 3 to 6 months or so.
Okay, Deepan, thanks a lot for joining us and have a good evening. Let's start wrapping up the market action then for the day. It's been another strong day for the bulls and really just non-stop. The Nifty up 107 points, very close to that 18,000 mark. The Sensex is closing above 60,000. After 5 months, we will have a close above 60,000 on the Sensex. That itself calls for cheers from the bulls, right? And the Midcap index also did well. In terms of individual names on the Nifty, IT stocks led today. So we had names like Tech Mahindra, which was higher, Wipro as well, HCL Tech did well, Bajaj Finserv and Bajaj Finance, they have been stunning all through the last 2 months. And today as well, Bajaj Finserv was the top gainer, 6% higher on that one. Hero MotoCorp up 3%. Hindalco was higher by about 2.5%. Tata Consumer rather, Eicher Motors, NTPC, HUL, Grasim, ITC, all these stocks moved up 1%. Axis Bank as well, which was enough to make sure that the Nifty gained by about 100 points. There were a couple of losers though. Apollo Hospitals, that's been an underperformer. That's down about 1%. Tata Motors was down 1%. Mahindra was down 1%. So clearly some profit taking in a couple of the auto names. You can throw in a Maruti as well. And Ultratech Cement also was a bit weak. But otherwise, Prashant, it's just been stunning, the pace of the market rally.
Oh, absolutely. Big gains, 100 points plus, 35 points off the high point, of course, in the last couple of minutes of trade. Just broader market, Z is broken out. I mean, it broke out a few days ago out of a downward sloping trend line, and then it failed. And today it's broken out of that once again. So let's see if this is more to go. 251. Nigel, of course, mentioned Happiest Minds, 11%. Gujarat Alkali is another one. Huge volumes. And, we spotted this when markets open. Ends about 5.5 higher. Hikal up 9%. ICICI Securities was up almost 9%, 533. Aarti Drugs, again, started strong, ends about 11% higher. Chennai Petro, 5%. Force Motors, 13.5%, something we brought up on the show in the last hour. Rate gain was up 8%. NDTV, 10% higher. Limit up, 331. And so on and so forth. So lots of action in the broader market space. Nigel.
Well, so it was a good trading session on the whole. The Nifty goes home with a gain of closer around 100 points. So that's a century. Averaging, I think, will be a little bit higher because the majority of the last half hour odd, we traded closer to around 17,940. Midcap index, a little bit of an underperformer today as was the case with the Nifty Bank. But on that note, we'll have to wrap up on this edition of Closing Bell. But you don't go anywhere. Our Wednesday special, Mad About Markets, comes up next.